From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB on this Monday afternoon. All of the stuff you need to know about the day in business and markets. I'm Nadine.
I'm Kyle Brodder, actually. And, in fourth gear today. I'm trying to get to fifth because we've got a huge week. We really need to be ready and raring for it, I think.
Yeah, well, you know what was ready and raring today, pretty much from the get-go, was the local market. So we had that jobs read on Friday, lots of enthusiasm in the tech space still, although, a bit of tempering of that enthusiasm in terms of NVIDIA. But yeah, we came out of the gates pretty well today and remained about 1% higher. So a little bit of a waning toward 3 p.m., 3:30 mark. But yeah, looking pretty good, I think, all things considered. You know what else, Kyle, had a good day? Some of the smaller end of the market. So, the Russell 2000 on Friday in the States did really, really well. Our small words index wasn't, so positive, but it did gain about 0.5%. So good to see. Interesting around the region, we saw a lot of strength in Japan, but Chinese mainland markets lower.
That's interesting too, because we did have that news over the weekend that maybe there'd be a bit of additional support from Chinese policymakers for the property market, which is one thing that I think everyone's been sort of hoping for and perhaps sorely missing from this recovery so far in China. But it's very sort of strange price action, I would have thought.
So too.
We did have those mixed US jobs numbers, right? We had a big increase in employment, but the unemployment rate lifted, wages dropped, but it wasn't a sort of growth-led rally because rate cuts might get priced in. It was a very cyclical rally. Today, consumer discretionary materials all up by 1.9%, 1.2% respectively. Healthcare's in there, that's defensive, but IT stocks down 1%. So hard to kind of make sense of that.
So, we've got this rate watch ongoing, which is why I was surprised to see the consumer discretionary names doing so well today when we do have, even the shadow RBA board now calling and forecasting a 25 basis point hike come tomorrow. But I think with the consumer discretionary names, they're so beaten down. It was such a bad week last week for a lot of those names that maybe there's just a bit of bargain hunting moving in. You never know. But really, there is momentum behind the moves that we've seen, particularly in the United States. And we did get a health check on some of these Asian economies today, including our own. We got a PMI released here. You just had a chat with Warren Hogan, didn't you?
I did, and we started the conversation. Of course, he is from EQ Economics, but works as an advisor to Judo Bank, who now sponsors and releases that piece of data. Manufacturing PMI, in his words, are doing what we want it to do, which is to effectively contract and do so in a fairly smooth way. But services, the growth was at a slower rate for the month, but still pointing to a real resilience in the economy. And he simply says just the labour market is so full, aggregate incomes are so robust and high that until we take some steam out of the jobs market, it's simply going to remain that way. So, of course, the inference from that was, there needs to be a hike tomorrow.
Needs to be a hike, all right. We've got Jarden calling for a hike, Nomura calling for a hike, AMP Capital is calling for a hike. ANZ says that it's a very line ball call whether it will be June or July, but they reckon there's another couple of hikes coming through. So look, we'll discuss that no doubt a little bit later on, but here's the snapshot of the retailers. A little bit of news out in terms of Myers CEO will be stepping down in the second half of FY24. But yeah, when you see that the retailers are higher and then you've got a real defensive part of the market, healthcare also one of the best performing sectors. What do you make of it? It's just been one of those funny old days. And to your point, infotech losing a bit of ground.
Yeah, and that was the high flying area of the market for the last couple of weeks. Perhaps a little bit mixed there, but Xero down 1.8%. One of the biggest players, still up 23% since it reported a few weeks ago, but a little bit more patchy. And we are seeing Nasdaq futures down this afternoon as well, for what it's worth. But yeah, it's again a really difficult market to make odds and ends of, other than what you just alluded to before, which was maybe a bit of a short squeeze going on there because there's some beaten down areas of the market that seem to be popping.
One area that remained beaten down today were the gold miners. So Newcrest was down by 1.7%, Northern Star off by 1%. Now, Evolution Mining was a bit of a different story. It has approved an extension of projects for its Mungari mine in WA, also an extension for its Ernst Henry, I think that's how you say it, mine in Queensland. So Evolution, I'm just going to double check where it ended the session, but it was, bucking the trend in the gold space today. That's a yearly chart, a bit misleading. Today it was up by 3.25%.
Okay, so weakness across the gold plays there, but also AGL, class action?
Yeah, apparently, allegedly, I should say, it breached consumer law while it was bidding in South Australia when it came to the national electricity market, but it says that it's going to be defending those proceedings. So I said that Myers CEO stepped down. Well, totally different story over at Elders, because Mark Allison
Sticking
has
around.
been, bit of a U-turn there. He's going to retire.
Just
now
kidding.
He's not.
Yep. And the shareholders would be happy with it, because it would seem investors, priced out a little bit of uncertainty. Maybe, the known candidate there up, 6 or 7% by the end of the day?
Well, it finished up by about 3%. It was up more significantly during the day. But it's an interesting one. The board saying it is in the best interest of shareholders, stakeholders to see him remain at the helm, while it sounds like they didn't have much luck finding somebody else internationally or here locally, and they're going to just build up some of those skills from within. One thing we haven't mentioned yet, Kyle, is OPEC. OPEC Plus extending that production cut agreement through to 2024. Also, the Saudis saying they want to keep the market, on its toes. So they're going to be cutting production in July. It was unexpected. What did they say? Like a lollipop?
Something about lollipops and ice creams. I think they were just keen to get to the dessert part of the meeting by the sounds of things. It was weird. But the whole message is that while we're not here to sort of appease anyone, we'll keep you, again, on edge until we've come up with a decision. And, cut production, and on top of that, Saudi's doing a little bit of extra on the side too. Yeah,
so they want that oil price above that $80 per barrel mark. Regardless, we chose energy as the sector of the day for the call. Here's what our expert guests had to say.
As exploration upside, it doesn't have the local uncertainty with tax issues as well. I mean, they've got their Brazilian tax issues, but they've got a bit of a kicker there, and it's probably the cleanest.
So not for Woodside, Santos, any of that?
Not at the moment. I think it is. I am keeping an eye on the whole play, because I think this, again, in some of these resources, I am looking at it, but you are in a recession type cycle. Whether it's a recession or not, it's not what I'm caring about. It's a slowdown. We're seeing that slowdown, and it's going to get more. So they will be affected. And for me, Karoon, because of the clean play on the oil, it reacts much better, so it holds up a lot better.
It's interesting that the market's pricing in a recession, yet oil is $70, coal is $130, gas is admittedly quite low. But these sort of levels used to be boom time prices. I mean, oil in recessionary times used to get down to 50, 40, even lower. So I think the curve has changed, where there is a structural change in energy prices, and that should bode well when the cycle turns again. So I wouldn't be rushing out. I wouldn't be rushing out to buy energy stocks right now, but I would keep in mind that I think we're in for a period of heightened profitability for all energy producers across the board for a number of years, until we can solve this supply problem.
Okay, so perhaps a message that, there's a time to buy energy stocks. Maybe the time's not now, but, keep an eye out for it.
Look, it was a pretty muted reaction, I think, all things considered, not only in the price of oil today to that OPEC announcement and Saudi's announcement as well, but, early in the session, I think Santos was up by more than 2%, finished the day up a pretty modest 0.6%, Woodside up by 0.6%, so actually underperforming the broader market. Look, let's get some analysis as to where we sit right now. Welcome to the COB, Josh Gilbert. He is from eToro. Josh, nice to see you this afternoon. What do you make of today's trade here locally?
Yeah, well, we started another week on the front foot. We did so last week. That did quickly fade, but look, I think we're enjoying that strong run that we're having on Wall Street at the moment, which is offsetting some of the maybe weaker performance that we are getting locally, especially with the RBA being, I think, slightly more aggressive than what investors were sort of pricing in, at the start of this year. And we've obviously sort of really clinging on to that year-to-date gain. I think before today's open, we were up about 1.5% year-to-date, when you've got sort of the NASDAQ up sort of 32%. So we're really clinging on to that gain. Whereas, ultimately, when we sort of look at sort of what's happening locally, there's obviously not sort of that sort of same performance. But again, starting on the front foot from that strong lead, and obviously now all eyes turn to obviously the RBA decision tomorrow.
I guess that US jobs report really set us off on the right foot. So it would seem that the markets now are sort of just slowly backing away from the notion that the Fed might hike next week. Still in the price that there's a chance, but greater comfort there might be a pause coming up.
Yeah, well, I think it was a bit of a mixed bag, really. I'm not sure it makes the Fed's job any easier, because obviously that jobs number was obviously much stronger than the market had anticipated. But obviously that unemployment rate obviously moved to sort of 3.7% as well. So I think the key here is that job strength, is the inflation concern, because obviously you've got supply chains to goods demand, housing, commodity prices. Those are sort of, slowing as well in terms of commodity prices. But I think that ultimately, I think it put the money back in the camp of a pause, because, I think that although they've, hiked to sort of 5%, I think they feel that they can probably take their foot off the gas a little bit now. We've had obviously a lot of conversation. We've heard a lot of comments, from Fed speakers over the past couple of weeks. But I think that if we do get a pause, will they say it's the end? I'm not sure. I'm not sure they will. Markets are pricing in at least another couple of hikes from here. But yeah, I'm not sure that jobs number really made the Fed's job any easier, given that it was a bit of a mixed bag, really, because obviously, a strong number on the job side showed that, we're not really moving into a recession, and this is a slowdown. It's a bit of a Goldilocks scenario in that sense, but obviously the unemployment rate was obviously, pretty positive for them. So yeah, a bit of a mixed bag.
Well, we won't know what they're thinking. Well, we never really know what they're thinking. We know what they tell us, but we're in a blackout period now with the US Fed. So we'll have to, just look at the data and make of it what you will. But you did say that all we're waiting for here now locally is that RBA decision here tomorrow. So 2:30 p.m. Eastern, as we know, we'll find out whether or not we will see another 25 basis point hike. Talk to us about market pricing and what happens if they do hike.
Yeah, well, markets are expecting a pause, but does that mean much after the last meeting? I'm not sure, because 20% chance for hike, and that's exactly what we got. So I think that until that inflation reading last week, I think that a pause was very much everything that the market had sort of priced in. But that inflation reading coming in much hotter than expected, I think has really left that door open for another hike from the RBA. But I think even if we do get a pause, which seems to be what the market thinks is going to happen, and is sort of the key from most economists here in Australia, I think we've got to be wary of further hawkish comments from Governor Lowe, because I think that those hikes, I think there are still hikes ahead. And I think, Lowe will sort of reaffirm that the RBA will sort of do what it takes to tackle inflation. And although he may sort of pause, this time around, just to sort of really see if, inflation staying sticky, last month is a trend, or if it was just maybe a one-off. So I think that, we will get that no matter what. So I think that's a real, reality check for investors at this point, because as I said earlier, the RBA have been, much more aggressive this year than I think the market has been pricing in. And that's why we've seen this weakness. And I think that another hike would put the equity market under pressure, because it wasn't that long ago that, we sort of thought that, 4.5% was the peak in rates, and that rate cuts would be coming very, very soon. Now we're expecting at least another hike by August, which is, completely turned these rate expectations on their head. So again, I think a pause is what the market is expecting. But as we can see from what happened last month, I'm not sure if those market expectations, really count for much moving into this. But yeah, a pause is what's on the cards, of course.
Indeed, and it does seem there's an air of inevitability that the cash rate will end up above 4%, whether it be tomorrow or by the next meeting. But Josh, really appreciate you getting us off to a very good start to start the week. Hope you have a fantastic week. Josh Gilbert there from eToro.
See you, Josh.
Thanks, guys. See ya.
Well, RBA, you and me here, 2:30 p.m. tomorrow. Let's make it a date.
Yep, Steve Miller, Amy Oster, and David Flanagan is the other one who I should always remember because he's
always here.
He's our guest.
He's like, you can set your clock by it. I hope it's a surprise, only so that I can hear Kyle go, what? Ooh, again.
Yeah, constantly perplexed. Yeah, always bemused. Yeah.
Well, top of the leaderboard today, brain chip only. This time there's a bit of news associated with it. I wouldn't call this material news. It's put out a press release saying that it and Lorser Industries will develop neuromorphic computing systems for software-defined radio devices. Now, I still don't know what that means, but at least today I've got something that I can say why we're watching brain chip shares rise. It's up by 6%. NRW Holdings, a more concrete piece of news there.
That was a broker move, wasn't it?
No, big contract. Actually, you're right. Sorry. It's been upgraded to a buy from a neutral by Citi. Price target also lifted to $2.90 per share. So you can see it there at $2.31. And we've got Citi saying that the contract awards that it's winning could really accelerate.
Yeah, and Bapcor, Lavisa there, we were talking about the beaten up names catching a little bit of a bid, not on that list, but another one. There is IDP Education actually rising another 4%, only relevant because obviously it got absolutely dumped about a week ago, but regaining about half of the losses for now. Pro Medicus too, another one that seems to be sort of very quietly retracing, but we'll keep an eye on that because healthcare stocks were just a general outperformer today. Everyone's saying that it's a good place to be in if you want some of that defensiveness in your portfolio right now. But let's get to the laggards now, and I think it might be mostly gold. Well, what's that? Four out of 5. Oh no, Noble Helium.
Yeah, I don't
the heck is that?
know. I know. I didn't know it was on the 200, if I'm completely honest with everybody. But look,
it might not
we'll
be.
look into what's going on there with Noble Helium. But yeah, to your point, we've seen a lot of pressure coming through on
not
some
a chance
of the...
in hell, that's a mistake.
Yeah, okay. What's the market cap? Yeah,
25
million.
mil.
Jeez.
Gee, someone in the newsroom is being paid off by Noble Helium.
Yeah, totally. Okay, Imugene is on there and Perseus Mining as well. Interesting, I just see Iris not on that list, but not too far off. Yeah, a bit of share sale happening there. So pretty motley crew when all is said and done. Let's take a look.
Is there anything more heavy than gold and lighter than helium that you can get at the end of the market there?
Okay, let's look at the small to mid cap space of the market, shall we? And we've got Imutemp is looking pretty good.
There was news today around that as well. So I remember on the SIBO cross.
It's got
trying to pronounce it.
Drug trials that came through on a positive note. And Botanix Pharma, that had some news out as well because I was going to try to interview them on the small caps, but I couldn't make it happen.
That's a call to action, guys. Let's get it happening.
Come on, BOT. It's up by 25%. And it has got a new territory licensed for, oh my gosh, again, I can't even read the word, but it's partnered up with Kekin Pharmaceuticals. So we'll see. Why are you just looking at me like I'm insane?
No, just
it's called Spofprionidium bromite. There you go. Thanks for making me do that, Kyle.
Good effort.
Let's flip the page.
Come
on. Moving on.
Glad it's you, not me. I'm sure the helium was supposed to be on here, but it's not. But you can imagine that it could be there. Brockman Mining, Magnus Energy Tech, Winston Resources. That's one that's sort of perennial.
And those AI themed companies, losing some of the steam today. Appen down by 9% and Archer Materials. I think that goes and confirms my theory of last week that it was the AI hype that was helping to drive Archer Materials.
Also, okay. Well, let's have a look at what's overnight because if I'm not mistaken, actually, and we'll get the graphic up because I'm sure it'll be confirmed. There it is. ISM Services PMI. That actually might be fairly significant to set the tone for the rest of the week because we'll be wanting to watch the price component there as well as any potential resilience in US services activity because, well, as we keep getting told, that's where the stubborn, sticky areas of economic growth are coming from right now.
Yeah, everybody says watch. That's what you want to watch when you are thinking about the possibility of recession. I'm just checking out if we've got anything. No, Eurozone, we've got Centix Investor Confidence Survey. It's been stalling lately, given that uncertainty. And we get the final estimates of May S&P Global Services PMIs in Europe, the UK, and the US as well. Tomorrow, it's all about the RBA, and we also get the first quarter balance of payments, so we're getting some more of those GDP partials. It's so weird that we get the RBA monetary policy decision before we get GDP.
Yeah, I don't know, it's always been that question, isn't it? But I suppose they don't really set policy based on GDP necessarily, so I don't know, maybe you can wave that away. But nevertheless, actually more interesting the day after will be that speech given by Governor Lowe, which again is getting a little bit ahead of ourselves here, but well, the sales job's going to be so important whatever they do tomorrow.
Okay, well, again, we will have you full coverage from 2:30 p.m. here on Ausbiz, ausbiz.com.au. You can also watch us on 7+, Iris, Samsung TV, the list goes on.
YouTube, Twitter, there's lots of places.
Yeah, well, if you've missed anything today, you can go to our website, catch up with all the news and views, and we look forward to seeing you tomorrow.
See you tomorrow morning.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.